Hello. Hello, everybody. Good to see you, Ed Ponsi, your FX educator, here on behalf of FX Street once again. What a reversal. What a reversal we saw overnight in the metals and the euro and really everything. So we'll get to that first. But before we begin, just understand that this is your room. And if you have questions, you can feel free to ask them. I'm more than happy to try to answer any questions you might have. So you've got gold up there. And just for a little context, I'm going to show you the monthly. Start you with a monthly chart. Okay, so huge rounded bottom that took, 7 or 8 years to complete. And then a breakout out of there. And you can see the month of July has been very, very good for gold as gold finally breaks out and breaks resistance and goes to an all-time high. And I believe last night it gets to 1976. If I'm not mistaken. Yeah, 1976 was the high, but now it's $50 lower. You can see the context, though. On the daily chart, that looks like a pretty awful reversal. But on the monthly chart, you can see that gold is still, higher than it's been in many, many years. In fact, it's higher than it's ever been, with the exception of last night. And so let's go intraday to see if we can get a little insight into that reversal. You can see, wow. Now look at that. It was just going. This is one I went to bed somewhere right around the time it turned around, it looks like 10:30 at night. This thing was hitting all-time highs, and then it immediately dumped. You can see there's a 45-minute period where it drops about $40 per ounce. There was one more big dump around 4 a.m. my time, so probably from the European / British crew, did a little bit of selling. Actually pushed it intraday. Did it touch 1900 again? Just about touched 1900 after touching 1976. So gold is getting really volatile. And it's not just gold, obviously, so we'll talk more about that. At 4 a.m., it did touch 1900. I have 1,900.2 dollars per ounce. So a huge, huge spread overnight in terms of range, and volatility has really picked up. But look at the way that it's being sold straight down. It's being sold hard. Now, we cannot pull up volume on currencies, but we might be able to pull it up on this. Yeah, look at the volume spikes on the intraday. So that's clearly institutional selling. Late last night and early this morning, you see two big spikes on the right side of your chart. And those are big red spikes at the bottom of the chart are volume bars, and they coincide with big red candles moving lower. So there we have it, right? Huge, huge, huge drop, huge dump of gold by institutions overnight, it looks like. So during that 15-minute stretch, how much was sold? I think that would be an interesting question. 18,000 during this 15-minute stretch and 21,000 during this 15-minute stretch. So pretty big volume on the selling tells me there's probably more to be sold. And we said that there would probably encounter resistance at 2000. So it never did get to 2000. It got to 1976 and then encountered some resistance. So, and this is all going to play into current, because you're going to see the currency chart is not at all terribly different from this, the euro chart. But there you go, big swing higher, lots of green candles, and then this weird candle that we've got right now with the big wick on top and the little wick on the bottom. You know, we don't know what that candle is going to be. But yeah, that was pretty harsh. And next, I'm going to take a look at silver, which has been along for the ride. Silver and gold could be considered currencies, certainly before paper money. This is what people used. Yeah, there's the silver reversal too. So silver actually touched 26 and now it's down to $23.62. And so a big, wide-ranging candle overnight that went above 26 and below 23 for silver. And you can see the volume is pretty high on the way up and the way down for silver. Let's look at the daily volume on gold. While we're at it, it's nice to be able to check volume. And this is one of the things that you have to deal with as a currency trader, is you don't get to do that. Now, look at this. This is interesting to me. On gold, the volume was much higher on the way up overall, right? So look at the day previous and then today's volume. Now, today's not over. So today's volume could go higher. It could go a lot higher. But if you look at silver, do that same comparison with silver, and you're going to see that today's volume is much higher relative to the day that preceded it. Right? Nearly equal to the previous day and a day's volume. And we're not, we're not near the end of the day yet. We still have the entire US session to go here. Now, the euro is going to be similarly affected. There's a high correlation between euro and gold, for example. And while we cannot pull up the volume on euro, we can see that we did see a pretty rough reversal here on the euro. Now, I'm going to go to the 15-minute because we know the times of day that gold reversed. Does it correlate to the euro at all? Remember, there are more hours on this chart, so it's not going to look exactly the same. It really doesn't. I mean, you do see the big 4 a.m. drop. Here's where gold dropped last night. And when I say 4 a.m. or 10:30, I'm talking about New York time. But this coincided with a big drop in gold last night. And this correlates with a big drop in gold at 4 a.m. So during the UK Open. So there's definitely correlation between the euro and gold. And so if the gold hit an all-time high, in case you missed it, and then they pulled a big reversal, and the euro pulled a big reversal at the same time, should not come as a big surprise. The one thing that is interesting about this chart is the big dump that euro took about an hour ago, which is not reflected in gold. So something having nothing to do with gold is probably responsible for that. Now, in case you missed it, we did close out of the euro trade yesterday. It's all in the archives if you want to check it out, but entry was 113. All three targets were hit: 114.40, 115.75, and 117.45. We did adjust those targets slightly lower. The high for euro was 117.81 is what I'm seeing. 117.81, 117.81. And so all three targets hit on that one. Euro, pound, right? That's just kind of hanging. We've hit the first target, and we're just kind of hanging out in the middle of that channel for now. Aussie, New Zealand. This is heading toward our stop. We're only halfway in, though. We have two entries on this one. The first entry was achieved at 107. Our stop is 107.60. The high so far today is 107.52. But we only have a half position. The second half of the entry is down here. So we designed it so that if the price never broke that horizontal line, which I'll make it a dotted line for you. If the price never broke that dotted line, we'd never get a full position. So we were taking a chance that it would come down, and it still might work out. By no means surrendering here. We're still alive in this trade. But the way that this trade is designed, we can only be halfway in unless it breaks down. If it breaks down, then we enter the full position and start hitting targets very soon after. Just 50 pips later is the first target. So if we get stopped out, it'll be a stop on half the position, which I can live with. In addition to that, if we had a full position, the average entry would be 106.30. But since it's only a half position, our entry is 70 pips higher, which again makes that loss smaller. And of course, if you've got stops that wide, the targets must be pretty far. We were aiming for 700 on this one. Don't laugh, because we got 445 yesterday. Not all at once, but we did end up getting a 445 on the euro. We were in that trade for a couple of weeks. And, I'd rather make 445 once than 45 10 times, or 4.5 100 times, and pay 100 commissions, right? Yes, you do pay a commission whether you realize it or not. It's in the spread. Okay, so S&P futures, where does this leave us for today? Big reversal night last night. It's kind of crawling along that line, and that line, I'll make that a dotted line as well. That represents the recent highs, and we're just kind of hanging out there. It's a big week for earnings, of course. I think you get Amazon and Apple this week, in addition to many others. Maybe Facebook as well. It's just a huge week for earnings, maybe the biggest week yet. And I think if you're an institution, you're probably reluctant to be a buyer here or a seller until you figure out what happens, what's going on with Apple and Amazon. And those are both hitting on Thursday after the closing bell. So that it's definitely a big deal. Amazon's an interesting chart because if you look at it, it kind of looks like a double top there. Could be heading down to 27. Microsoft looks very similar to Amazon, also a double top with lower highs and lower lows within that double top. So there's definitely some, could be some bearishness happening there. Now, this could mean that money is moving away from some of those really big NASDAQ names that have led the charge this year and last year. And so if money rolls out of there, where would it go? Well, you look at the movements in commodities, which we already looked at gold and silver earlier today. And a weak dollar, here's copper. We haven't looked at copper yet today. Copper is just sort of basing here. A weak dollar is going to push commodities prices higher, right? There's copper and oil, of course, is right in the same boat. Just kind of struggling to get through this area. It's crazy, isn't it? Oil's been trying forever to break this ascending triangle, and the candles are getting smaller and smaller. But it's trying to bust its way through 4130. It's just kind of hanging on the line right now. You know, I think about if the dollar continues to weaken, what happens to commodities prices? They clearly go higher. And one way to play that would be owning a commodity currency like the Australian dollar, or owning an ETF in Brazil. Check out the Brazilian ETF. I'll show you the Australian dollar in a minute. Check out, this is the Brazil ETF. It's EWZ. What do you see on that chart? I am guessing that you see a cup and handle. Because that's what's up there, is a cup and handle. All right, so where does this tell? What's this telling us? You had a big run from the lows, a 55% gain, then a cup and handle. And where's that? What does that mean next? It's going higher. Now, let me show you the weekly just for context. You're going to say, Ed, this chart's already gone up so much. So how can I buy it? It's already gone up so much. Because it's still down 30% for the year. Right? It's way down for the year. Now, on this angle, it doesn't look as much like a cup and handle. It looks more like a ascending triangle. And I think you're going to find that those two things often appear together. But no matter, you know, either way, this looks like it's heading higher. It's currently 33. I would measure it to be 38 target price based on either an ascending triangle or a cup and handle. The low end of that is 28. The high end is 33. So the cup and handle is approximately $5 in height. Add $5 to 33, you get 38. 38 is where it appears to be heading, right around here-ish. That would be the goal line. Okay, so anyway, let's take a look at the pound. What about a pullback on cable targeting 13030? Let's just see now. Let's see if I can figure this out. That's the daily. We'll go week daily here. Big, now, pound is busted out of a big cup and handle, and you'll notice it hasn't really pulled back that much. But if we do get a pullback, it could be very interesting here. Let's get rid of this cup and handle because it's long gone. The only thing I would say is this. The only way this cup and handle could still be useful to us is if something like this happens. If it pulls back to around here, that would be a screaming buy right there, around 126.50. Carlos is looking for 127.60. I see what you're talking about. This could also work. 120. See this area right here? I think Carlos is looking at this. half and half, right? How about I would prefer to buy it higher where you're buying it, 127.60. Yeah, nice. I show it more as like 127.40, but I get your point. I get your idea there. Maybe buy half at your entry and half at my entry. We could set that up. Carlos says 126.70 looks better. I'm going to go weekly here. I know Carlos likes the long-term charts. Well, yeah, if you get up those wicks, it's going to take you to 126.70. So, where is it? Just let me double check that. Yeah, about there. I'm within 5 pips of you on that one. So, yeah, I think buying a pullback makes sense. The other thing is when I see something taking off like this, I really want to check my EMAs. Now, I don't really see any evidence that there's any buying happening on the EMA here. There was actually maybe some here. Now, remember, sometimes it could just be a coincidence. But I do believe that institutions sometimes use moving averages as buying entry points, especially when they're building a position over time. And but there's not a lot of evidence on the 10 here that this is what's happening at the moment. 127.40. Look at that. Okay, the EMA is coinciding with this area. I'm starting to like this area a lot more. So let's see. Why don't we get some here? I'm going to call it 127.50. Which is right about here. And that's only a half position. And then down here I've got, actually, hold on, I should be a little bit lower here. Instead of 50, I'm going to go 127.40. And the neckline here is about 126.60 and change. I'm going to go 126.60 at the neckline. It's going to make the math easier. 1.2660. And that's going to give me, if I get both of those entries, that's going to give me an entry point of 127 even. Too many lines on the chart, gang. I'm just trying to clean it up a little. I didn't want to get rid of the text. I wanted to get rid of the line. Okay. So I said 127.40. Let me put that up there. Why can I not hit the right button today? There we go. That gives an average entry of 127 even. Now, where to put the stop is the tough part. Ideally, I'd want it under this handle. And that would mean putting it under 125. If I go under 125 with the stop, that's a really wide stop. I have to be able to, here, let's just put it there for giggles. Call it 124.80, because we're not putting the stop at 125 by any means. Now, one thing for sure, if the price gets down that far, it's a mess, but we don't want to be in. But that's a 200 plus stop. You would need a 600, 700 pip target, and I just don't think we're going to have one. Weekly. Well, I could be wrong, actually. We might get one. Look at this. See that? That's almost 131. You know I'm putting a target just under 130, right? Because just the massive round numberness of 130 tells me there's probably going to be resistance at 130. So let me get under and call it 129. $129.75, let's say. That's a 275 pip target, simply based on the round number. Look at this resistance up here. Bam. Bam. Right there. 132 is kind of a big number. So I got to go under that. Let's call it 131.75. And suddenly this doesn't seem so unreasonable. Because that target, 131.75, that is that's nearly 500. You know what I'm going to have to do? I'm going to have to put the target closer. I'm sorry, I'm going to have to put the stop closer. It's looking like about a 2-to-1 here, and I don't want to create targets that are not on the board. I don't want to create a target up here somewhere on the moon because there's no, I don't want to go above this area of price action with my targets. 131.75 is as high as I want to go at this point. So I'm going to have to, I can always close sooner. Yeah, but I don't always plan on closing sooner. And in addition to that, I don't randomly close sooner. Right? Because if, if I'm 90% of the way to that last target, 95% of the way to that last target, I don't have a problem. Like, for example, yesterday, I could have made 20 more pips, but I was risking a lot more than 20 to get that last 20. So instead of 465, I ended up with 445. But all of those targets that were initially created, there were logical reasons to get there. There were logical reasons to get there. And I don't see any logical reasons to have a target above 132. So we can't go this low with our stop, which is unfortunate. But the low point of these two prior candles, these 2 weeks, 125.18 and basically 125 on both of them. Let me go daily here. You know what? We're running out of time here. We can always finish this during the next segment. But just understand this. We have two entries. We have two targets. We'll probably have a third target, and we'll probably have the stop is too far away. We'll probably put it higher. Why don't we adjourn for now? We'll come back in 30 minutes. And when we do, we'll finish this setup for pound US dollar that we've got cooking here. Until then, it's Ed Ponsi, your FX educator. Thank you so much for listening. I'll catch you here in 30 minutes.